All right, and we're back with Keys to Home, Series 2, Episode 19. Jim Pratt is joining us again. Mark is back. Last week we did part one of life insurance, kind of why you need life insurance at different stages of life, from birth really through, octogenarian. Now we're going to talk about the different kinds of policies that you may have available to you, and maybe when to use which kinds or what ones to use in tandem or what have you. We'll start by welcoming Mark back and catching up with you. We expressed that you were at a series of family funerals that were, one might have been expected because of age, the other absolutely was not. But was it good to see family? Did you get to have some of those connections? And I know you're going to have a ton to put in on this episode.
Yeah, so I mean, you're right. One of them was expected, one of them was not, and I think because of the unexpected loss happened at the reception of the one that at the funeral reception for the other one, the amount of trauma and drama that unfolded as a result of that kind of supplanted some of the other stuff. Now having, a few weeks later into this, I've been able to process some of it, and it had overshadowed the one that the loss that I had that was expected. But the significance of having a life insurance policy, and more importantly, I would comment about, have you shared that with your family, and do people know the this, that, and the third thing about what happens if you suddenly pass. And I'll shut up here in a second because I'm always guilty of talking, and why not? Because it's a podcast.
Yeah.
But in my coaching practice, we go through wills and trusts as part of our training. One of the things that I think that has come out of this, there's two things that have come out of this. Number one is, have you built what I call a legacy drawer, and collected all of the information that is important to your life, and then number two, have you shared that with your family members, and so that's where I'm at right now. I was not in a good place with the losses, and it's
understandably
taken several weeks to overcome that, but I think what the last thing that I would say in regards to what I've been through is that it has, through the unexpected loss, I think it's brought our family together. And if that's the positive thing that we can get out of it, I'm leaning into that positive thing and honoring the loss that I experienced through what he has done, what he brought for us to come together. And that's brought the grace and the patience and the healing that I've needed.
Yeah. And again, I'm just really sorry for all the things that you've gone through, but if you can find a positive in it, and we are going to have a estate planning attorney on, and I'm doing senior move management, so sometimes that happens before a senior passes when they're downsizing, and sometimes it happens after, and all the businesses that are ancillary to that. But a legacy drawer is really important. And Jim, maybe that's something you can give us tips on, or the two of you. Often we hear, oh yeah, mom had life insurance, dad had life insurance. I remember this being taken out. What company was it?
Yeah, that's what I want to point out with what Mark had said, and maybe what he had either went through, or it's just some of the process that he teaches, it sounds like. But that's a question that I get a lot. So when we handle their auto and their homeowners insurance, they see that bill that's going to come in the mail on a regular basis. So they have that if their parents, for this example, their parent passes away. But there is nothing most of the time that has anything to do with the life insurance documents. So sharing that with your loved ones or with your family members, with others, that's a must. One of the things that I try to do is I try to do 18-month reviews with all of my insureds. And in that conversation, I'll always ask about life insurance, of course. And if they have life insurance somewhere else, which comes up, randomly, then I always let them know, look, this is what's going to happen. Something were to happen to you, your loved ones are going to contact me first because they're going to have the home and the auto to deal with and go through. And then they're going to ask about life insurance. And you don't have your life insurance with me, which is fine. You have it somewhere, and that's great. If you would like to give me that contact information, then I will have that on file and be able to help them and give that over to them. So I offer that. I don't have many that take us up on that, to be honest with you. But that's something that I do offer here. And if, anyone out there that's listening and maybe you have a different agent, maybe you ask them to do the same thing for you, if you need to do that, or at least share that information with your loved ones.
So my parents are 84 and my dad was an insurance agent. And he sold for Erie for a very long time. And he sold for Beacon American. And he sold for Allstate briefly prior to that. But that all started in the mid-70s. And they got married and had kids in the 60s. If they were to die, and I had not had the conversation, you know how you can go to unclaimed funds and be like, oh, you have $50 from an electric company. Is there any clearinghouse? I mean, what? If somebody bought a policy back in the 60s that was, I have no idea, whatever magic kind is that doesn't expire, so not term, and it's still running around, how do you even know? I know he said he had insurance. I don't know where it is. Nobody knows where it is. Or remember, I don't know. What do you do?
That's a great question. I do not know of of anywhere you could go to find that information. Yeah, I don't know, because most of the time you're going to have to be able to look up anything. You're going to have the policy number, you have the names, you got to have the policy number, those types of things. And if you don't have that handy, that'll be very difficult to find.
And they're all tied to Social Security, so it should be that if you have a Social Security, you should be able to look something up. But I don't think there is anything.
Not that I know of. Mark, have you heard of anything like that?
Sorry, I was on mute. No,
sounds like a business idea.
It does. But I think in this conversation, part of this conversation should include things like your passwords and your email accounts, and that obviously this needs to be secured. You're talking about the things in your life, maybe things like a safe where you have everything located, but things like your birth certificate, things like your life insurance policy, your auto and policy. I mean, it's putting stuff together. Maybe it's a notebook, but here's another aspect of this. Not to shift the conversation or anything like that, but this is one of the reasons why a lot of my clients opt to go for joint accounts. And the reason why is because without joint accounts, let's say, for example, my imaginary wife and I'm married. I go down the street, God forbid, I end up in an accident, and I'm comatose. So if I don't have a joint account, how is my wife going to access stuff?
Right. But Mark, even right now as a single man, everything you do on your houses and your real estate that you have gathered through hard work and paying off debt and getting this position that a lot of people aspire coaching, FYI. What were to happen to you? Because not everything's on auto pay. So if you, in the same scenario as a single person, were hit and in a coma, not dead, do you have something in place that someone could pay your whatever bill so that,
So what I have, that's a great question. This is the kind of stuff, Jennifer, that I'm going through as a result of the loss that the unexpected loss that I had, and asking myself right now, I'm not shy to share that I live in the North Texas area, the Dallas-Fort Worth area. There is no family that's close by.
Mm-hmm.
Okay, number one, the closest family member to me is in Chicago, for the most part. Okay. So if something happens to me, we have my second oldest sister and we communicate at least 2 to 3 times a week. If there's something, if we don't have communications in place or someone hasn't said something, yes, we're asking those questions. And as for bills, quite honestly, no, I don't have anything on auto pay. One of the things about me as a financial coach and taking control of my finances, I take that back. I'll share this in a second, but I go into my bill pay service. I sit down and I make my own. I craft my own bills. The only person
you see it going out, and it's part of, it's just like with Dave Ramsey and using credit cards. It's very easy to spend more than you want. When you're on auto draft, it's very easy to be like, oh, I didn't check my electric bill. Holy cow, it was $800. So I get that.
Exactly. But to answer your question, for my insurance policy, and I'm a veteran, so that probably tells you who I'm with. They are the only person that I have granted access to pull money out of my account.
Mm-hmm.
The reason why is because and Jim, maybe you can talk to this too. I get a discount. There's several discounts that I get. If I have a semi-annual plan, I get a discount. If they pull the money, the state from my account, I get a discount. How do I offset that? This is a little bit of financial coaching. How do I offset that? I have a sinking fund or a temporary savings account. I've taken the cost of my yearly premium, divide that by 12. That tells me how much I need to put into a savings account every month so that I can just transfer the money back to the checking account that they pull from.
Yeah. So why don't you tell us a little bit about the different kinds of, well, first of all, let's catch up what we did last week, but what was kind of what Mark was doing. We went to Ohio to clear out a home that Tim had inherited 4 years ago, is when his father passed, and his mother had passed prior to that. And we thought we were going to be potentially renting it out. Now we don't know if we're going to rent it, sell it right away. It's all up in the air, but there weren't clothes, but everything else that a couple would have since 1996 was essentially there, most of it. And that's one of the things with Senior Move Management that we do, is come in and talk to you about what's going with you, what's going to an estate sale. And we're gonna definitely table that conversation to a different episode because it'll get too long. But we're going back up this weekend, then we're taking a weekend off, and then we're going to go back up and have the moving truck and the haulers and things going to his sister, things went to aunt, things going to him, things. Okay, what of the things do the daughters want that they may take now, or what do we need to hold for them that they want but they're put into a house? So different situation, but it just seems that a lot of people I know are either buying homes, selling homes, having unexpected funerals, cleaning out parents' homes that they've kind of not been processing for a minute. What have you been? Hopefully it's a little more fun than that, Jim, but what have you been doing the last week?
Nothing any more fun than that. I played catch up all week where I was out on vacation. We talked about that last episode. So I played catch up all week long, and then helped my daughter move some this weekend, or get prepared to move a little bit. She's moving to Clarksville coming up soon. So yeah.
Now is that for college? You got Austin P?
No, she's moving with a friend that's going to college. She's actually got a new job opportunity up that way, so she's going to move there for that.
Okay, very nice.
Nothing overly exciting.
Yeah, but lots of moving and a lot of, examining what do we have. And I always say when you move, that is the time to review your will and to review your insurances and take a look at all those things. So let's go ahead and jump into kind of the meat of it. And I guess high level overview. I know there's term. I've heard universal life. I've heard other things, but tell us about types of policies and then maybe break down into which ones are best for scenarios.
Okay. Well, I guess the best way to start is, and we touched on this briefly last week, is just kind of I think it's keeping it simple when you're talking to an insured or a potential client that you have. And as far as keeping it simple is, we just run through the LIFE. And Jennifer, I know you've heard me say that multiple times in, my BNI presentations and even in this last week. But that's how I break it down because it's just simple. So the L obviously is for loans. So what loans do you have? The biggest thing is going to be obviously your mortgage, right? So you put your mortgage in there. You put your credit card debt in there. You put your, what you might have owe on your autos or any other of those types of things. And those loans, because they're not permanent, they can be paid off. That's going to go normally into a term policy because it's not permanent. Your income, which is the I, which is next, that's going to be what's your annual income. And then we want to try to get 3 to 5 times that, depending on what your budget is. And we're going to lock that in as well. That's normally going to try to put that on a permanent policy if possible, because income is something you're always going to need. That need is not going to go away. And then of course you have the F, which is for the funeral expenses. That can range from, as low as maybe $5,000 to as high as, normally high as 20 or 25,000. A lot of that depends on, are you going to be cremated? Are you going to have, just your natural, burial? We talked about it a little bit last week as well. Are you going to have family that comes in and you're going to fly them in because obviously you're going through a situation where you're mourning the loss of a loved one and you don't want to feel like you have to entertain, if you will, anyone else that's coming in and staying in your house. So maybe we fly them in, we put them up in a hotel room so we can have our time to ourselves or with our immediate family. But that's going to go into a permanent policy as well because everyone is going to pass. And then of course the E is can be for education. It's kind of what we use that for anybody that is maybe wanting to send their kids, their grandkids to college. Obviously that's going to be something that is not permanent. It's going to be paid off at some point. That even could be something if you want to make a donation to your church or a charity that you are very fond of, you can put that in that section as well, that you can, donate. But that is going to go into a term policy as well. So it just kind of breaks down. That's kind of how I break it down for everybody when I'm having a conversation with them. And I allow them to come up with their own numbers when we're having that conversation. And at the end of it, we go back to this, what you want and what you need. This is how much you need. How much do you want is the next conversation. Usually I circle that big number. We talk about it a little bit, and then I allow them to take that home with them. And then at that point, I'm going to put together a presentation for them with a couple of different options. We're going to have another conversation, and we're going to allow them to make a choice on what works best for them. But they've taken that piece of paper home with that big number circled, and that's kind of burning in their head what they need and what they're going to need to take care of their family if something were to happen to them. So that's kind of my initial process on breaking that down from a term and a permanent standpoint.
So let me ask you, let's say we're just going to use history major math as I love to do. Let's say that I have a $250,000 mortgage and I've got 2 kids that I anticipate it's going to be $125,000 to put them through school.
Okay.
So we're up to $500,000. And let's say that I'm making, again, history major math. Let's just say I'm making $100,000. So would I need a term policy for like $500,000 and then universal for another $500 for my income for 3 to 5 times?
Well, the permanent can be a couple of different. Yeah, a permanent policy could be a couple of different options for you on that. So yes, so in a perfect world, yes, that's how we would want to do it. We would want to have the loans and education in a term policy, and we want to have that income, that funeral expense in a permanent policy. But budget is real life, as I'm sure Mark knows with what he does. So because it's a budget situation, part of what I do for them is I break this down into a couple of different options for them. So some of that income that should go into a permanent policy may actually go over into a term policy for now, because this is where we are. Maybe later in life they get a promotion. Maybe they have paid off their house or paid off some debt, so they have some money available. We can take some of that term policy at some point and we can convert that into a whole life policy or a permanent policy to help make up that difference from where we we had a lesser amount previously. We can take that money and roll that back into a whole life policy at some point. So we're going to have a conversation of what they need, what they want, and then we're going to give them multiple different options on what's going to best fit their budget.
Generally speaking, is say 500,000 in term and 500,000 in whole life, is the whole life a more expensive monthly premium?
100% of the time, it's going to be more expensive.
And is it usually like double or triple, or like is there a ratio that it runs around?
No, there's not really a ratio. It all depends on, of course, whether you're a smoker, whether you're a non-smoker, how old are you, as far as that's concerned. So there's a bunch of different factors in there from a, medication standpoint. I'm on blood pressure, other issues, maybe big health issues going to come into it. So there's no specific ratio, but it's going to 100% of the time be more expensive. So that's why we try to, and I try to make it a point that I want to get a hold of those young adults. So at least have these conversations.
Can you raise the amount? Like, let's say that you're talking to a young person and they're 25 to 30 years old and their income is 50,000. And so they need 250 now, but by the time they're 40, they're making 150. So can you then raise that universal life? Can you raise a term life, or do you have to have new policies to do that? And obviously 25 years from now, everything we're saying could be different, but like, what is that kind of process and thought if you're working to today's parameters?
All right. So that brings up kind of offsetting that specific question. That brings up another thought process. So, when we are going through the process of the life insurance, my suggestion is, if they need, let's say they need 500,000, since that's a number we've used a couple of times. Let's go for the 500,000. Let's put that in. Let's get rated for that, because if that comes back, maybe you're rated high because of some medical issue or whatever that may be, we can always, from a budget standpoint, we can go from 500,000 down to 400,000 without any other medical happening, right? We just turn that into the underwriter and make that change to bring that budget back down to fit where they need to be. It might not be the 500 that they need, but to fit into that budget, we've got 400, which is better than just deciding not to have anything at all, right? So that's a piece of that. Going back to the other question is the answer is no. So can you raise your current life insurance policy? Let's say you have a term policy that's 500 and you may need 750 in 10 years from now. You can't raise the 500 because you've been rated on that particular policy at that age and that health, right? So, but you can always go in and now get a $250,000 life policy, get it rated on your age and your current health, and now total you have obviously you have the 750. We can't raise. You can always go down. Maybe I've had a $500,000 policy. I don't need $500,000 policy anymore, and maybe I want to lower that down to 250,000 because either A, I don't need it, or B, maybe my budget tells me that I need to be back down there. So 15 years from now, we can lower that back down, and that's fine, but we can't raise it back up because we've rated you on this specific one at that, that age you are.
All right. So then that brings up the other question is, you and I have been talking about life insurance, and I wanted to be able to pay off my mortgage, and I wanted to have some money that went into a trust so that the home could be maintained. And I've told my kids that every 3 to 5 years, they need to do a home inspection and used the money from the trust, hopefully just the interest, not the principal, to repair any red items. Because when you have a home inspection, you have green, everything's good. Yellow, this is informational or something to keep an eye on. And red, this is, hey, something that needs addressed. So they're supposed to fix any red items with the trust money. And then that takes care of a certain amount. But then I told them, and we mentioned this briefly last week, I don't care if you insure me for more, so that if I pass, you've put in $100 for 20, 30 years, and you're able to have $125,000 inheritance that I wouldn't have been able to get for you, just because of the way my life has progressed to this point. I haven't been able to make a ton of investments, but I don't care if you invest on my life. But I am blessed with very long-lived family. So I literally was thinking, okay, 30 years is going to take care of the house mortgage. That'll be taken care of by then, most likely. I would need something to put into the trust for maintenance if I hadn't simultaneously been building up a cash fund, which I intend to. But, things happen. In 30 years, I would think that I could build up a pretty good thing that had a principal they could get the interest off of. But there's a very good chance. I mean, I'm 58. There is a very good chance that I'm living past 88. So I'm wondering if a 30 year is enough for that other option that we were trying to get them of, where they have some kind of inheritance that they're paying on, and might it now be better to do a whole life for that segment of it instead?
I think you just answered your question.
Right, because I didn't know the differences of these. So that sounds like what to do. And then additionally, if I have not been able to save up enough by 88, and they're all getting, say, let's just say 125 because there's 4 of them, they could maybe each take 25 of it and put it into that trust if I haven't been able to fully fund it.
Right. So let's go back a little bit. So you were using the age of 58. So for a 30-year term to be 88. So you could get this is way shelter works anyway. So you could get a 30-year term on that. But you're at 58, you're going to have, if you want to convert that at some point in time to a permanent policy, let's say the budget sounds better with a term policy at 58. Well, if you feel like at some point you need that beyond 88, you're going to need to convert that with shelter by the time you're age 65. If it's after age 65, you won't be able to convert that policy to a whole life policy. So that would be a conversation with your your life insurance agent with that particular policy that says, hey, will I be able to convert? When is my drop date?
But I can't do that. Is there a drop date where you can't get term or whole policies after?
With shelter, yes, there is. So there's different dates that are involved in there, so where you can only get the certain policy to take you out far enough. So in your case, my suggestion would be, with what you're telling me, is let's do a whole life policy or a combination of the two.
Okay. This is why we have talks with people, because this is not our wheelhouse. And even though I know a bit about life insurance, I don't know all the ins and outs and what's wherever. Mark, has any of this brought up any questions that you have, having run into things this last week or with clients or whatever?
Well, yeah. Number one, I just learned something about the age bracket, or the 65, age 65. Is that generally the industry where you can't get, or?
I know that's the way we do it. That's what we do at Shelter. And Shelter is the only insurance company that I've ever worked for. So I would not be 100% sure that you can do it after 65, but I would safely say that an educated guess would be that generally that would be the case. Yes.
Okay.
So over the last couple of weeks, I have received a life policy a claim, from a life policy, and I was taken back a little bit by the amount of you have to agree to, do you have any outstanding debt with the IRS? I was asked that question. I was asked questions like, do you have any debts? I had to listen to a recording based on the state that I lived in. And I had to sign a bunch of, and fill out a lot of different paperwork. I did that. I could do that electronically. And then they did send the claim information in a packet, but I did do that over I take part of it was digitally and part of it was over the phone answering questions. I was taken back by the sheer volume of legal type of communications that was coming at me for being
to have that benefit to give it.
Yeah, have that benefit to get that claim. But that's the thing that surprised me. I'm assuming that that's normal.
Well, I think that's going to be a state to state thing. would be my guess, because I know that, and I'm going through a situation right now where a mom lost her son, an adult son, due to cancer. And of course, we have a claims packet that we fill out. It's nowhere near what you're talking about now. We're obviously going to need a copy of the original death certificate. We're going to need to fill out the claims forms that are on our side of it. We're going to need to fill out a W-9, which mainly has something to do with our company, not necessarily something to do with the insured. But that's basically it.
Actually, you bring up a good, you just triggered another, I don't know if trigger is the right word, but you just generated another question in my mind.
Yeah, I had to stop short on what I was going to, example I was going to use a minute ago too, so given the topic.
Exactly. What about taxes?
That's my question.
Yeah.
Is life insurance benefits taxable?
Or anything on deaths? A death or an inheritance as a result of a death, you get
inheritances can be. That's a state by state thing for sure. But is life insurance federally taxable?
It's going to come to the beneficiary tax free. That's how it's come to the benefit. Yeah.
Federally, and then state by state, talk to your accountant or whatever. Okay.
Yes, that would be my suggestion.
Okay, and then that had another. Okay, that was my other question. Okay. A lot of people. Oh, go ahead. Yeah.
I was going to say, I think there's a really important concept that you talked about, Jim, and that is around the budget. Okay. And that is in my wheelhouse. And so everyone that's listening right now, what's really important is this is the reason why we want to get out of debt and not have the debt, because what are you trading for by having the debt? Okay. You're trading. Anyone that's listening that's deep in debt and has a family and your own offspring, people that are dependent upon your income. If you're sitting here saying, I can't do this, then what you're trading for that debt is the security for that family should you pass.
Yeah.
I want to anyone listening right now, I want you to stand in front of a mirror. And I want you to ask yourself, I would rather have this debt than be able to take care of my family should I die.
Right. And you think that that's like a big woo-woo story, but literally some stupid reel came up on my phone the other day, and it was a young girl, and she had her car towed for illegal parking it. She was living in her car because both her parents had died. And she was trying to go to school, and she was working as a waitress. She was trying to do all the things. And it was the last straw. And the judge gave her mercy on the traffic tickets. Her parents raised her well to have that kind of drive to keep going.
Yeah.
But they didn't put a protection in place for her to have somewhere to live and an ability to pay for lights and water if they were to die. And obviously these are scenarios where you're like, okay, but is that going to really happen? Well, you don't know. And that was going to be my question, is how many people, Mark, are living maybe not paycheck to paycheck, but 3 months out? So my question to you, Jim, is if you are in that situation where somebody passes and you have life insurance, because this is not a question you Google. If you Google this and then someone dies, prime suspect. How long does it take to get your money or some of the money so that you can do just life?
Right.
I mean, maybe not all the 500,000, but something.
But you'll get it in however much is coming. Right? You'll get that lump sum because that's how it usually is going to come to you. That's how it's usually in the life policy to be put out. So that is all. There's no specific answer to that. There's a lot of that's dependent. So, for example, with the scenario that I'm going through right now, trying to help this mother, how fast can we get the copy of the death certificate? Right. So if we get that within a week, then we're going to be able to get that packet in, and we're going to get that turned around. It does not take long for insurance companies, at least for shelter, to turn that payment back around and get it to you. But she said it's going to be about 2 weeks before she'll be able to get that death certificate. So then that pushes that timeline back. But what both of you are touching on, and Mark kind of started with his conversation was you're talking about the debt piece of it. So are we, do we want to leave debt to our family, or do we want to leave our family a legacy, right? So if I can get out of debt, then they don't have to spend that life insurance money paying off that vehicle or paying off that.
Exactly. It's just their money.
It's just their money to leave that legacy. Hopefully they're able to turn around and invest that.
But your microphone
financially and turn that into the legacy moving on down the line. So it's debt or legacy. I think that's where you can break that down and maybe hopefully, help people understand the difference.
Yeah. By the way, you're a little staticky today, Jim.
Everybody's a little staticky for whatever
reason. Are you? Okay. I didn't know. Then maybe it's just my computer.
Yeah, I tried to move my phone a minute ago, see if that had anything to do with it. And y'all two are both blinking yellow every once in a while. I don't know if I am as well. So
no, okay. I just have a little like a microphone going, a little bit. Well, and we'll talk about this too. When we have the will and probate on and we touched on it briefly, but do people know where your life insurance is, where your will is? But from this last bit of the conversation, do you have some mattress money that you can go put into an account? Are you transfer on death, which we found out in Tennessee, there's not that on real estate, but is there a transfer on death or some other, have you added somebody to an account? Does the account freeze at the bank when somebody passes? Or can they still access that to be able to pay utility bills or get gas or fly in a sibling? If a spouse dies, fly in a sibling or somebody to be there with you to help you. Those are things to start, maybe go to your bank and say, what happens to my joint account if somebody passes? Or what happens to their account if somebody passes?
I think Mark could answer this pretty well. It's getting really staticky for whatever reason, but I think Mark can probably answer this from his point of view, from the coaching, from the finance piece of it. But, whoever you have coming in from an estate attorney, the will, the trust, those type of things, that would be a great question for them. I had a lady right before we got on this had come in, and she had brought all of her power of attorney things, documents that I needed, because she's taking over for a family member to make sure that she can pay the bills, everything comes through her, she can make decisions, things like that. Now, I'm not an expert on that whatsoever. It'd be a great question for your state attorney, maybe Mark can feed off of that.
I 100% agree with it. One of the things that I think this is exposed. And for me, I've had several losses of family members over the since 2017, and one of the things that I have found that is seriously lacking in the loss of a family member, where there might be a life insurance policy involved, or there might be estate things involved. At any point, the serious thing that I'm finding is that people are not talking. They're not talking about how things are set up. They're not communicating about how things should be laid out, and everything is being decided on on a reactionary standpoint.
It's a taboo subject,
right?
And it shouldn't be.
Yeah, and it shouldn't be. And they're not responding from a proactive point of view. So that's largely what I've experienced, and what I feel like I'm hearing from others that might be in a similar situation. I just go back to the same to why it's so important to take control of your finances, and so that if you're out of debt, all of these things that this is just another thing to be in control of. Because Jim, it cannot be stressed enough. Do you want to leave your family debt, or do you want to leave them a legacy?
Yeah.
I thought that was a fantastic statement. And at the end of the day, if you're saying my budget can't handle $300, we need to talk.
Right. Well, and when we're talking about why are people not talk about, what do people not talk about? Politics, religion, finance, right? Aren't those the three?
Yeah.
Because it's intrusive. But if you have a faith, are you not supposed to talk about religion? And I'm not saying in an ugly way. If you don't like something in our country, we have freedom of speech. We also have the ability to vote. Again, not in an ugly way, but shouldn't you be voicing your opinion on, is this working? Does this need fixed? Whatever. And we have gotten a lot more vocal on talking about those two in society. But we're not very vocal about talking about finances. And I'm not even talking to the just running by someone on the street like the street corner preacher. I'm talking about the people that you care about who have an input to you, but also in everyday conversations with friends. If you're talking about it with your family, I've mentioned to 2 or 3 people, and I tell you I do this with my clients. Have you updated things recently? You know, is your ex-spouse on your life insurance policy from work?
You know, one of the things that I feel is really important in how I've approached this with my clients. We all talk about the 4 walls, okay? Real quick, the 4 walls are your home, food, utilities, transportation.
Mm-hmm.
Those are your 4 walls. I have added a couple things to that. So what I've added, the 5th thing is
hydrangea bush, root, fire pit.
When you walk in those 4 walls and you look up, what's stopping from, protecting you?
The elements, yeah.
The 5th thing, or the roof, is a strong defense, and that's insurance.
Yeah.
It cannot. One situation can change your financial situation, bar none. And then the floor. I always talk about the floor being, if you need any kind of prescriptions or any life, things to manage your life. But I cannot stress this enough, and that's just simple. If you don't have a strong defense, it doesn't matter how great your offense is.
Yeah. And I would ask Mark, I know that one of the things that Dave Ramsey had talked about in the past was self-insuring. You need less insurance when you have more assets. Our things have become so expensive. To rebuild a house is so expensive. To put a new bumper on a car is so expensive. To, any of those things, I don't know that we're in a situation, good for Jim, where we're going to ever be able to fully self-insure because things have gotten so expensive. I think we're going to always have to have more reliance on a good insurance agent and a good insurance policy to keep that protection above us.
That's one of the reasons why I partner with insurance agents and realtors and brokers, mortgage brokers, because those core functions is, in my mind, the foundation of a good, healthy financial life. Secondly, and Jim, maybe you can talk to her question a little bit more than I can, but as far as I'm concerned, if I'm going to have a good defense, regardless of what my assets and okay, and then I'll shut up because I talk a lot. I might raise my deductibles if I can self-insure, or if I've got assets that I can help. I might raise deductibles to get a lower cost to me, because I can handle. That's another reason. It can be another reason why you want to get out of debt, but because I can handle a higher deductible. But I don't see a time in my life right now where not having any kind of defense available to me with it is possible. I just find it to be a core function of my finances.
Well, and that speaks to homes that are paid off. There was a story in the news about an older lady in the Memphis area who is living in her car parked in her driveway. and it's hot. I mean, the heat index was 120 yesterday in Memphis. And what happened was a storm had come through. Her mortgage was paid. She had money set aside for her tax bill, but I think she was not home insured or sufficiently because the storm messed up her home and she didn't have the wherewithal to fix it. And it's been a number of years. So now the home is just disintegrating more and more and more. And that's the same thing with your analogy of a roof. If you have a strong, solid roof, that's great. But if you have some gaps and holes in it, you better figure out a way to patch them because it will come through and break down everything. But even if your home is paid off, you still need to have homeowners insurance, property insurance for these. I mean, I really don't know that our weather events are getting that much more dramatic or that like the cost of things is so exorbitant or if it's a combination.
So multiple things. To answer that last one, weather is it 100% is getting more dramatic because of the property. The cost for insurance is going to continue to rise, and it's just because the overwhelming amounts of insurance companies are paying out. But going back to the self-insure, I mean, let's be honest. Like realistically, overwhelmingly, most people are not going to be fully self-insured. So what Mark said is a good alternative to that. So insurance is basically a transference of risk, right? So if I have a lower deductible, the insurance company is going to have the majority of the risk, so your rates are going to be higher. If I want to raise my deductible, which goes back to some of it's kind of a definition of being self-insured, right? So we're going to transfer more of the risk over to the insured, so your deductible is higher, so the premiums are going to be lower. Let's roll back a few minutes though, because one of the things you mentioned, you talked about defense, and you talked about people, if they can't afford $300 a month for something, let's have a conversation. So I am a big believer that if you feel like that you can't afford life insurance, that's who needs it more than anyone else. Because if you can't afford, let's just take a random number of $50 a month. If you can't afford $50 a month, let's say for $15,000 worth of secure whole life insurance, which is the least expensive
like a
whole
burial
life insurance we have, like a burial policy. If you can't afford that, $50 a month, could you imagine the strain that you're going to put on your family when you pass away, and now they have to go through the process of burying you and what that cost is going to be put on them? Because I can promise you that funeral home is not going to bury anyone until they get paid.
And I don't think we have paupers' graves anymore.
Jim, that is huge. I mean, that's such a big concept and such a great comment. I mean, seriously, if you can, and you know, the unexpected death in my family was a person that was younger than 40 years old with a wife and two kids, and you know, so if you can't, in this perspective, if you can't afford $50 for we don't know when we might be called home.
Mm-hmm.
And the fact of the matter is, if we're it's no big deal, then you need to stand, and I've said this once before, stand in front of that mirror and ask yourself, is it okay to leave what you're leaving? I'm not hammering someone. I'm just asking, are you willing to trade the safety of your family for the debt that you're carrying?
I'd probably stand in front of a picture of my family.
There you go. Yeah, because I think what you just said, Tim, is I'm put it on replay because that is huge.
Yeah. And that might be our wrap up because we're at 50, unless anybody has anything else to add.
Well, I would like to do a quick summary because one of the things we wanted to talk about during this, and we kind of touched on it piece in here, but we got into a really good conversation is what are some of the different types of life insurance? Yeah. We made it a part 3 to hit the part 2 subject. So one of the biggest issues that I come across just talking to potential clients that may have life insurance somewhere else and or have life insurance with us, is the term policies. So you have a 10-year term, you have a 20-year term, you have a 30-year term, okay? And at some point, so a 10-year term, if you want to convert it, needs to be converted in the first 8 years. 20-year in the first 16 years, and a 30-year in the first 24 years. What happens is, going back to the word communication that you mentioned earlier, that's an issue. You need to have an agent that's going to be able to communicate with you and that's willing to communicate with you. Because what happens is, let's take the middle. Let's say you have a 20-year term. And let's say that I take that term out when I'm, 30. So it's going to run till I'm 50. Well, what happens is people get to that 50 years old or that 49 years old, they haven't converted that policy, or they haven't replaced it with another term earlier on at an earlier age. It's going to take them out further. Now what happens? So that premium, let's take a random number of $40. That premium of $40 a month that they're paying for that term policy is locked in for 20 years. Once that 20 years is up, the policy stays in force. The problem is, at year 21, it turns into a yearly renewable term.
You want some real numbers?
It goes, so yeah, so it goes back to the cost of insurance at your age, and that premium jumps dramatically.
$25 a month when I was 35. And when I turned 55, it went to, I want to say, $1,200 a year.
Yes.
And then the second year it was $1,500. And by the fourth year, it was like $2,800. So if somebody wants real numbers, and I mean, this was just recent.
So let me just say this real quick before you go, Mark. So what needs to happen is what if this person at that point has become uninsurable during that 20 years? And so now they have to face a situation where, they're going to have to keep this life policy potentially that is going to become so expensive that they won't be able to keep life insurance for their family.
Yeah.
What should have happened is one of two things. In 20 years, they should have at some point in time, as I mentioned, replaced that term with another term if they're healthy. If they're not healthy, they should have converted all or part of that before that conversion date passed, so that they had some life insurance, because some life insurance is always better than no life insurance. So that's what should have happened. But all that comes in communication with your agent. Your agent should be on top of that, where every, let's just say 5 years, they're having a conversation with you at minimum about what you want to do with your life insurance.
Okay, so those were my real numbers. And that was healthy, no meds. And at the time it termed, I had been working for my insurance agent.
Wow.
So there was not communication.
One last question, Jim, for me. At what point in a term should a person start looking at adding a new term to extend past the original term?
There's no specific number that I go with. Okay. Maybe it can be a life event. Maybe they've gotten a promotion, and we say, okay, let's look at this again. Let's add more to it, or let's rewrite a new one, depending on what your age is. We just kind of look at a whole overview of what that life policy looks like. Maybe they buy a new house, or just some type of life. Maybe they have another child or something like that. Something a life event that may draw the life insurance conversation back up. And then basically what it is, it's up to the agent to kind of look at it and say, okay, this person is just turned 40. This is going to run out in them when they're 50. They're obviously going to need life insurance beyond 50. So let's take a look at their health. Are they eligible to get more life insurance? Even if they are, but it's rated up, let's take a look at that number, see what that number looks like from a budget standpoint. So you used a lot of different factors that you can look at, but most of the time it's some life event usually that kind of sparks that conversation.
Yeah, or maybe their children have already gone through college, and so they don't need that E section. They're not doing an endowment to a church or something. So yeah, I would say that any of those life trigger events, new house, new marriage, divorce, someone entering or exiting the family, or entering or exiting education, would all be those triggering events to review and see what's going on.
Or you just have an agent that crosses their T's and dot their I's. I have an ability to print off the life insurance that I have in my book of business. I print it off every year, and I don't make a phone call to somebody every year necessarily, but it doesn't take me an hour or less just to kind of go through it, see something that may stick out, go in, look at that policy that may take me 5 to 10 minutes to look at. And at that point, I'm able to pick up the phone and having a conversation, or maybe I'm making a note in my sales system that I need to go back and have this conversation at a different time. But it does not take a long time to go back through there and just do the right thing.
Yeah. And again, just like we talked about with Benjamin with the house, have you done any upgrades to your house? Have you, added furniture? You're not doing that to upsell or sell or get another policy or win a shiny trip or whatever it is. You're doing it. And I think it's pretty obvious from our conversations on the podcast. You're doing it because you don't want someone to be in any situation that can be a learn from my mistake example.
Yeah, exactly.
And if they are in that situation, it's through no fault of your diligence.
Fantastic conversation.
Yep. So I'm not sure what we're talking about next week. I know that we're getting ready to cycle back through the beginning of, the home buying process, the getting out of debt process. What does it look like to get a mortgage loan? Some of those standard ones. I do know that we are going to try to get a trust and estate attorney on here, and that may be a multi-part thing as well. I think we're going to have some estate sale people come on and give us ideas, and I think I'll speak one day as an organizing and that sort of thing. We are looking, I think we're allowed to say this, at going live on one of our next episodes or so. So that'll be happening. We've got to figure out, because as some of you know, you'll see this on Monday, but we record them usually on Wednesday. So we've got to figure out if we're going live, what do we do with all of that? And I am looking at putting this on, the podcast platforms, the iHeart and Spotify and all those. So it'll get a little bit further spread out. So again, if anybody wants to PM us on topics we should talk about, or that you have questions about that we can just, one-off answer. And if you have any input about the going live or times of day or anything like that, let us know that too.
Okay.
Fantastic.
So, as always, thank you. I'm going to go ahead and click this to end. We will see this on Monday, the 28th?
28th.
Yeah. So.
All right. Thank you.